afternoon, everybody. This is Mark. We're back here with the afternoon call wrap-up. So it's Friday afternoon. Big move the last 2 weeks. We basically digested today. We ended up closing strong. I think there was a big buy imbalance. I think Morgan Stanley was reshuffling something. But overall, guys, we need digestion. Lots of things still intact, but at the same time, you got to respect the fact that because we're still overbought, this back and forth action or lethargic action as we had today, probably in the cards for a few days next week. The only difference is that it's beginning of the month, maybe you get that little uptick. We'll have to wait and see. Not quite sure. If there's headline news, that could affect it also. So overall, guys, I am bullish, but I think we need a little bit more time to let some of these stocks consolidate a little bit more for another nice up move. Spiders, again, closing right at 50-day moving average, so I think that's just to serve as a little bit of resistance, but minor for the most part. Qs, same basic pattern. It's now over its 200-day, and that should be roughly support for the time being. Let's go to Apple, which basically pulled back a little bit, but again, nothing that's exciting in my book. I like to see the 10-day moving average move up a little bit. 580, 577. That's where I'll look to get involved. We're not sure if it gets down there. More time above 580. That means it's probably just basing at the top third of its trading range after the most recent move, and it should move higher. Minimum touch to 200-day moving average 697, 597. When it gets above there, that'll be new buyers will probably come in. Stay tuned. That could happen next week, certainly. Google, almost tagged 700. That will be resistance. 705. Previous high will be a little bit of resistance. It seems like it wants to go higher, so just keep that in mind. Price line today, nice. After a big move, needs some time to digest, and I think that's really what's happening. Some big stocks that have made new highs today, which again, leadership stocks. eBay. Pretty impressive move on eBay. It's at yearly highs. Best in breed at this point in time with the PayPal behind it. Expedia still looks good. I think it's something to look at. YHOO still looks great. Facebook. I mean, for 5 days in a row, 6 days in a row of an uptrend. Very good, very healthy, filled the gap. Resistance is 30, but I've definitely taken some risk off. And I'm going to stay out of it for now. Maybe it grinds a little higher. It still looks great, but overall, I still think it does need a little bit of a break. It's just not giving it to you yet. So stay tuned. Also, be aware the special dividend. That's where I think a lot of these stocks are moving based on the tax ramifications the following year. Apple still could be in the cards. Somebody on CNBC mentioned Dish. Do your work. Find have a lot of cash on hand and could pay this special dividend, because I think that's an indication that one day you might walk in and it's up $5-6 because the special dividend happened on Wynn. It happened on a few other stocks this week, and it probably is going to continue to happen over the next in December, and we'll go from there. So you had some commodities strong today. I don't think anything to write home about yet. BTU was on the radar. OIH hanging. Schlumberger a little strength. Nothing that exciting. Still, everything's pretty much intact. FSLR still hanging in there. Solars you don't mention very often, but we know FSLR broke out a little bit last week. The key is how much can it stay above this key breakout level. The longer it bases above there, the next move that it moves to the new high, will get more people, will squeeze more shorts. So stay tuned. I don't think the move's over yet. I like how it's consolidating right here. That's going to be decent for next week from that point of view. And overall, guys, I didn't see a whole lot. The retailers, you can give or take, they basically digested. Under Armour, Coors. Coors made a nice move earlier this week and digested for 2 days. And I think you're going to see a move back to 55, 60 very shortly. So I think it's stay tuned. But again, in overbought conditions, I have reduced some stock. I'd like to ideally see us pull in a little bit. If we pull in, that reduces the overall overbought reading. If we don't pull in, that means we're very strong and people are going to start chasing a little bit. But a lot riskier when we're still overbought. So that's where I'm at right now. Nothing to write home about. Let's enjoy the weekend. Hopefully you had a good month. I know it was a wild month for us at T3, obviously with Sandy and being out of the office. being dislocated. But we're back full force, and let's close the year strong. That's how you have to look at it. And the key is, we'll talk about a little further, is setting goals. I think that's the key. Setting goals for yourself, setting goals for yourself as a trader. It's very important because you need to pinpoint something in order to really work towards. So enjoy the weekend. I'll see you back on Monday.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.